Let's welcome in Mark Mahaney. He is head of internet research at Evercore ISI. Mark, good to have you on. Why Amazon? Why the move? Why now?
Well, because we've got two product interested in two ways that the narrative could change on a stock, and then you've got a PE multiple that it's at a record low for the name. So that's the interesting setup for me. It's at 25 times earnings. I think that's the cheapest multiple you've ever had a chance at looking at Amazon at. Here are the two product catalysts coming up. We got a Kuiper launch, so this is going to be a long-term build. Actually, really intrigued by Amazon's ability to succeed in broadband satellite internet access or satellite internet access. I think there's a really interesting market that Starlink has showed us. And then you've got Alexa Plus coming to your Alexa device, and there's 600 million of these worldwide. So I think there's a kind of an interesting Trojan horse out there that could get Gen AI'd and become a lot more useful. And then in terms of the narrative shifting, I'm particularly intrigued by the ability of AWS, their cloud business, to reaccelerate in the back half of the year. I spent a lot of time with private companies here in San Francisco in the Valley, and we're seeing just dramatic growth rates for some of these private companies in terms of ramping up their revenue, and that at the application layer. And I think AWS is the company that those app runners are most relying on, and I think that's going to start showing up in the numbers. And if you get an acceleration in the highest margin business at Amazon, that's a good thing. You want to buy the stock ahead of that. So yeah, that's why it's our topic here. Best risk reward, I think, in large cap tech.
Do you want to point out that on a macro level, the NASDAQ is at session lows right now. We're down 2.75%, nearly 3%. Last time I checked, 91 of the NASDAQ 100 were indeed lower today. So broad-based sell-off. Mark, I know you're not like a macro markets guy, but Amazon's a massive part of it. It's in hundreds of different ETFs. What do you think is going on right now?
Well, we started the year, Brian, coming in with multiples valuations that were reasonably full. I looked at the internet space I cover, and there really was very little dislocation. There was only one DHQ, dislocated high quality name. That was Uber. That was our topic at the beginning of the year, and it's surged 25%. But the other names, you really had valuations, and then you printed December quarters that were good, better than expected, but the March quarter guidance for most of the names, for a variety of different reasons, was a little soft, a little mixed. So there really wasn't an incremental reason to buy the stock. And now for some of these names, like Amazon, that does have some tariff exposure. I think they've hedged it pretty well, but that is a fundamental issue for those or anybody that's working cross-border. So yeah, you've had a couple of issues like that. I think that's kind of a technical or macro,
valuations, Mark. We're simply. Do you think? I'm sorry to jump in. Valuations. You think we're simply too high, given the guidance?
I think valuations were full, and that's how I'd phrase it for most of the stocks. Again, there are a few exceptions here, but for the stocks to keep going, if estimates didn't move, you needed to have clean beat and raise quarters for multiples to expand. I looked at these as quality compounders, stocks that would go up on the earnings growth, not on a multiple re-rating. And you've had nothing but a multiple de-rating, or especially in the last week or two. I think that's called a little disturbance.
Amazon is fanning the flames of competition once again, and this time it is aiming right for Nvidia's head. Reports have come out about Amazon ramping up production on technology that will take Nvidia out of the AI GPU game, as Amazon takes the throne for itself. Is this just a bunch of PR talk from Amazon, or is there more truth to the matter? Only one way to find out. Welcome back, everyone, to Investocracy.
If your mission is to make customers' lives easier and better every day, which it is for us, and if you believe that all the customer experiences we know of today are going to be reinvented through generative AI, which we also believe, if you believe those two things, you're going to be building a lot of generative AI apps. If you build a lot of generative AI apps, by the way, other companies are too, on top of AWS, which is the leading technology infrastructure platform. So if there are a lot of generative AI apps being built on top of you, you can't help but get a lot of feedback from people on how they want those building blocks that create generative AI to be better. And if you're willing to invest in those building blocks, which we are, as you know, with our own chips, with Trainium, and with our own frontier model with Amazon Nova and model building services and SageMaker AI and Bedrock, if you're willing to invest in those building blocks and you're getting a lot of feedback, they get better much more quickly, which can't help but make it easier and quicker for people to build generative AI applications, which means you get more running on the platform. So that flywheel is very unique for Amazon.
The lion's share, though, you did say basically $100 billion run rate for CapEx expenditure. Can you give us even like a percentage breakdown of how much that goes to distribution, logistics, and how much goes to AI?
Well, lion's share is,
More than
tell you
50%?
most of it. Most of it. The lion's share is more than 50%. Yes.
Is it more than 80%?
We're playing the warmer and colder game.
Yes,
Yeah.
exactly.
Right.
I love a game. But talk to us about that capacity that you talked about.
Yeah.
AWS could grow even faster if you had all the chips that you needed, all the power you needed, the motherboards you needed. How much faster could AWS grow?
It's hard to put an exact percentage, but I do think it could be growing faster. I mean, I'm confident it could be growing faster. And, there is, for a long time, there still aren't as many chips as we all want. We have, we're fortunate in that we're very big partners with Nvidia, but then we also have our own custom AI silicon in Trainium 2, which we just released at reInvent, which is 30 to 40% more price performant than the GPU-powered instances, which is a big deal at scale if you're doing generative AI on the inference side. So we have maybe more chips than some others might have access to, but we still don't have enough. And then there just is not enough power in the world right now. And we're all working really hard on that. I expect that to relieve some the second half of this year. But right now, and the world can change, but right now we have just insatiable demand.
Amidst the flurry of activity in the stock market, Nvidia stands out as a beacon of technological advancement. Meanwhile, Amazon, the Goliath of e-commerce and cloud computing, made a daring move that sent shockwaves through the industry. Through its cloud division, AWS, Amazon unveiled its Trainium chipsets, poised to rival Nvidia's GPUs at a fraction of the cost. This move, aimed at disrupting Nvidia's pricing power, raised eyebrows and stirred speculation among investors. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
We heard amazing demand coming from Jensen Huang, who had his numbers out yesterday in Nvidia. Was there a limitation on the Nvidia chips in particular that pulled back capacity? And at what point do you think you can depend even more on your own in-house built chips to offset any of that?
Well, I would say, there's a lot of demand for generative AI right now. People are very excited about it. I think that all the different providers of chips have been constrained to some extent. I think some of the new generations maybe have gone through different evolutions and when they're going to be released, maybe a little later than people thought. There are some components like motherboards and things like that we all use that particular ones are in shorter supply than others. So, I do think there are some supply chain issues which I expect to get better. People are very excited about Trainium 2, to your question on whether we could see more demand there. And we have gone back at least a couple occasions to make more Trainium 2 than we'd intended because we have so much demand. So I expect that we'll have customers for as long as I can foresee wanting to run compute on instances that have NVIDIA chips, but I think a lot of the demand will also be served by Trainium.
The customers that you couldn't serve because of the limited capacity, is it that you just had to pull it back from everyone a little bit more generally, or who lost out here, do you think?
It's always a combination. There's for people that just have a very small amount of accelerators that they need, they don't usually have a problem. We have something called capacity blocks, which it's kind of like an on-demand way to use accelerators and generative AI chips, and that continues to grow. It's really the folks who have built, have an idea for a new application, but they need a lot of chips, where if we don't have the capacity, we have to give them what we can give them and give it to them as fast as we can and push our partners to get it in sooner. And they can't get their initiatives done as quickly as they want to if the capacity isn't there.
Anthropic's had all the capacity it needs? You've got a close relationship?
Yeah, we have a very close partnership with Anthropic. We have this project called Project Rainier with them. They're building their next model, their next version of their frontier model on top of Trainium 2 and our custom AI silicon. They're going to use over 400,000 Trainium 2 chips. Yes, they have capacity. They're ramping up, and we're excited about that partnership and what they're building.
As the tech giants clash on the innovation frontier, a new era of competition emerges. Microsoft, Meta Platforms, and Alphabet are among the tech titans exploring custom silicon solutions to reduce their reliance on Nvidia. Meanwhile, Advanced Micro Devices quietly emerges as a formidable alternative, capturing the attention of industry giants. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
For more on NVIDIA's report, let's bring in Susquehanna's Chris Rowland. Chris, great to see you.
Hi,
what do you make of the comments about being supply constrained, not just in Blackwell, but also in Hopper?
Yeah, I think that the Vegas line here was probably 38, 39. They missed slightly, but that supply constraint comment, that probably means they probably could have done 40 or maybe even more. We don't know what the supply constraint is of late, whether it's memory or still CoWoS. My guess is memory as they move from H100 to H200. But I think clearly NVIDIA could have shipped more here had they had all the components.
In terms of how we're supposed to dissect that supply constrained comment, part of it is understanding what was going on with Blackwell and whether or not there was a shift to Hopper in the light of a supply constraint, situation for the Blackwell chip. Have we gotten any commentary about the overheating issue? Is that part of it?
I don't think that that's part of it at this point. They talked about a successful new mask set helping yields for that product. So I'm not sure it's that chip. I think it could be an additional component like memory. It also could be these racks that are incredibly complex. We don't know about transceiver availability. We don't know about all the other thousands of components that are going into these racks. If any one is constrained, it could constrain shipments overall.
NVIDIA's resilience and innovation set it apart as a trailblazer in the industry. Investors are urged to consider the long-term potential of NVIDIA amidst the shifting tides of competition, but also to keep the competition in mind as it slowly catches up to NVIDIA. But what do you think? Share your thoughts down below. Finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.